the Middle East is obviously a huge part of the world energy markets. Now, was just looking, oil's down a little bit this morning. It's kind of having a similar kind of a reaction in that it's not moving a lot higher. But any thoughts on the oil market specifically as we move forward from here? I mean, look, it isn't just this. You got the Houthis in the Red Sea. You've still got some potential risks there, right?
Sure, without a doubt. And Steve, as you and I have talked many times, the biggest risk, I think, to this market is inflation. And the biggest risk to inflation is energy. So I think you have to focus on that. Now, take a step back and look what happened when Russia, which produces about 9 million barrels a day, 10 million barrels a day, they're about 10% of global oil supply. When Russia attacks Ukraine, you see this spike up in oil prices that then drifts lower because, honestly, none of that oil really came off the market. And I think you have a similar situation here. Over the last 2 weeks, you've seen oil prices rally quite hard, all right, with no oil coming off the market. Now, it does look like demand may be strengthening, particularly in China. And I would point to copper prices being up 15%, telling you that because copper is 55% of its demand comes from China, that tells you something positive is probably happening in China with copper prices rallying. But if you step back at oil markets, you built this risk premium in. The attack from Iran happens. There's no casualties. Biden says, hey, let's maybe not retaliate. I still think they do, but we'll see. And what you're seeing is some of that risk premium come out of oil markets in the short run. All right. But what's really important is think about 20 million barrels. 20% of world oil goes through the Strait of Hormuz every day. Iran sits on that strait. It is not a big, wide body of water. And if there's any physical disruption to oil markets in the Strait of Hormuz, I think you'd see a spike higher in oil. So near term, it's not surprising that some of this war premium is coming out of the oil markets. You saw that this morning, down $1. My guess, if oil markets were trading on Saturday afternoon, which they weren't, as far as I can tell, you would have seen $5, $10 spike.
Right.
When you saw nothing from a damage standpoint, because again, this was very previewed. Iran told us this was going to happen. The U.S., UK, Jordan, Israel prepared, knocked the weapons down, and so now you're seeing that premium come out of the markets. So in the short run, I think this doesn't have much of an impact until you see something happen from supply, if something happens from supply.
Probably another reason why sometimes it's not wise to trade in a knee-jerk reaction to a news, as you kind of see how this thing evolves, and the ultimate impact is less than known. And I would carry, your highest risk to the market is inflation, and the highest inflation is to energy, and the highest risk to energy is geopolitical. So I'm just saying, if you just look at the economic data that we're getting out from an ongoing standpoint, it's geopolitics that look like that have the biggest potential to upset the economic apple cart at the present time.